Hey, it's Adam Cardinal, Cardinal and Company team at HomeSmart. You're about to watch Next Level Homeownership, sponsored by TMF Mortgage Professionals at Shamrock Home Loans. Great informative series, all about bringing your homeownership to the next level. Enjoy the show. Hey, welcome back to Next Level Homeownership, sponsored by TMF Mortgage Professionals at Shamrock Home Loans. And we are here again, surprisingly, with Meghan MacAdams from TMF Mortgage Professionals at Shamrock Home Loans.
Good morning, Adam.
Welcome back.
Thank you.
Haven't seen you in so long.
So long.
So today we're going to be talking about 203K loans and what that entails. There are other segments in here. We'll be talking about Title I loans and renovations and who to contact. Make sure you're watching this entire video series about Next Level Homeownership to get all the information. So quick synopsis. What is a 203K loan? Is that like my investment 401K kind of thing? What is this 203K?
They really should come up with some better names. Yeah. So this is an FHA product, and it's a rehab loan. So the very bare minimum, this allows you to roll into just one mortgage, the cost of the house and the cost of repairs to a home. Yeah.
So sometimes we're out in the field and you might have an FHA product and the home has to meet minimum requirements. Can't have holes in walls, floors, ceiling, bad roofs, broken windows. There is a litany of things you have to look out for ahead of time when you have an FHA loan. But if you find the perfect house and in the perfect area and you have to have that house and it won't pass, that's when this 203K loan can kick in, right? To bring it up to par. But how does that work when the FHA appraiser goes out there to look at the house? Are they aware of what we're doing with the 203K loan, or how does that all work?
Yeah, they are aware of it. They know that it's subject to 203K financing. So they are, when they do their report, first off, they're doing two values. They're doing the value of the house as it stands today, and they're doing the projected value of the home, what they think it's going to be worth when the renovations are complete. So they not only have, your contract, knowing what you're purchasing the house for, they also have your repair estimates. And that tells them what you're fixing on the house so that they can put that report together appropriately.
Yeah. So when appraisers go out, they'll like give things levels, like a C grade, B grade, A+. So in this value, hey, this cup in this value, it's banged up, it's beat up. It's a little special because it says Cardinal Company on it, but it might only be worth $5,000 because it's an older style kitchen, let's say. And then they do the ARV, the after repair value, which then says, hey, that brand new kitchen's now going to increase the property value by $25,000. So then that's how they justify the loan. So what if it's not about passing? What if it's not, hey, this house actually passes for FHA, but wow, this kitchen's ugly and I can't live in this kitchen, but I really want this neighborhood. There's no other homes to pick from. My mom lives on the next street. Like, can I still use a 203K because I just feel like renovating my kitchen?
Absolutely. So you can use the renovation loan for not only cosmetics like kitchens and bathrooms and the pretty stuff, the stuff we want to fix, but you can also use it for the mechanicals. So like he said, the stuff that has to pass, or even something that, let's say the heating system did pass, but it's got a couple years left and who wants to get hit with that? You could roll stuff like that and some stuff that's, towards the end of its life, and just start fresh in the house and make it exactly what you want.
Okay. So what isn't covered under 203K? Can I do landscaping? Can I put up a doghouse? What can and can't
Depends on the
I
doghouse, I guess.
Yeah.
So they don't like what they consider luxury items.
No swimming pool?
No.
Jacuzzi?
You can fix a swimming pool if it exists. You can't add a hot tub. You can't add a swimming pool. Patios, I've heard like beautiful stone masonry patios, stuff like that. But like I've personally done this kind of loan. I had trees taken down. I had 14 trees taken down. So there's some allowances for that.
Okay. Yeah, I didn't even know you could do it because that's pricey. One tree is $1,500, $2,000. Take down a tree and get it removed. So that's nice not having to come out of pocket. I didn't even know that was possible.
See, teaching Adam stuff.
He's always teaching me stuff. So what are the minimum requirements, credit score and DTI? Does that have any play into the 203K loans?
A little bit. So it follows traditional FHA guidelines for the most part. We do need a 620 credit score versus the 580 rather for traditional FHA. So a slight difference on the credit, but other than that, it's very similar. The 3.5% down is the cost of the house plus the cost of the repairs and the contingency fund that gets built in. So, expect your down payment to be a little bit higher on that kind of loan.
Yeah. So what is that contingency fund?
So contingency fund is built in there in case something happens during construction. And I think anybody who's done any sort of renovation knows that while your contractor has your best interest at heart and gives you the estimate and they think that that's what it's going to be, things happen and things get more expensive and you never know what's going to come up. So the contingency fund is built in automatically by our underwriter. It's either 10 to 20%, and that allows you a cushion so that if something goes wrong, you can tap into that money. If the money is not needed during construction at all, it just gets dropped back onto the principal of your loan.
That's excellent. In the 203K loan, we also have to have everything itemized, correct, by a contractor. Everything has to be systematic. Practically every nail, every can of paint, every hour of work, all has to be itemized in.
Yeah, they want labor and material. That's what they're looking for. So the cost of the labor versus the cost of the materials that you're buying. Contractors do have to be licensed and insured in the state that you're buying in. So I've run into that before where because Rhode Island is so small, you'll get people from Mass and Connecticut and they hold licenses there, but not across the border. So that's a big one to make sure.
Yeah, absolutely. And then make sure to check into the series to see about Carmine DeLuca from Go Fix It, because they do all of that. They orchestrate everything. They have a subcontracting business all in Rhode Island, and they will line. You need a kitchen, they have the plumber, they have the person of tile, they have the cabinet installer, they have the floorer. They play band leader, and they have the 203K mainframe where they put everything in and then send it to your lender for you. How about that?
That's awesome.
So anything else in closing about 203Ks that you think would be important for the people to know?
I mean, that touched on it, I think, quite a bit. The one thing I will say is that there's actually a conventional version of this as well. So some people don't want the FHA loan because of the mortgage insurance and whatnot. Conventional has what they call a home style renovation loan. It mirrors the product for us, and with that, you don't have to have the PMI if you've got the 20% equity going in there. Okay. So some people, that might be a better option financially for them. Yeah. And then the other thing is that if you're spending more than $35,000 on your renovations, you're going to need a HUD consultant involved. And that's $1,000 out of pocket. You pay the consultant directly. We work pretty well with a few people in the state. You have the choice of every HUD consultant out there if you want them, or we can give you our recommendations on there. But just an extra expense that some people aren't ready for. Right. But you can pair this with all the first-time homebuyer stuff, which is really cool.
That's one thing I don't think I forgot in my notes here. The first time, so if somebody's getting right now, it's May 2023, I don't know when you're watching this, sometime 100 years from now, in some sort of...
Oh, God.
some sort of time capsule that this got put in. That's awesome. So if I have a client right now, we have a client right now that we're actually working with together that loves this house, and the roof is completely shot. It's coming through, the seller can't do anything, so we're trying to work a 203K, but then you can also do it in conjunction with different programs because they're getting a second mortgage for their down payment assistance and still getting the 203K. So that's awesome.
Yeah, Rhode Island Housing does offer the 203K products. We're one of their direct lenders. Adam works with us in Rhode Island Housing quite a bit with our buyers. But yeah, there's the grant that's out right now, and then their traditional, DPA assistance, down payment assistance. There's $15,000, and there's a $10,000 out right now. So depending on your finances, your income limits, credit scores, all that stuff, there is down payment assistance for this.
Yeah. Awesome. Meghan, thank you so much.
You're very welcome.
Been watching Meghan MacAdams from TMF Mortgage Professionals, and you're watching Next Level Home Ownership, sponsored by TMF Mortgage Professionals at Shamrock Home Loans. I'm Adam Cardinal, Cardinal & Company team at HomeSmart. We'll see you next time.